By the time you can buy SpaceX stock, the people who got rich off it already have. That's not pessimism. It's the structural reality of how private markets work. And it changes everything about whether this IPO is actually good for you. SpaceX, OpenAI, and Anthropic are all moving toward public markets at roughly the same time, and retail investors are flooding in with demand. Whether that excitement is justified, or whether it's the final act of a private market wealth transfer, is the question worth asking right now. On the Big Technology podcast, Alex Kantrowitz argued that a SpaceX IPO would be genuinely democratizing, a chance for ordinary investors to access a company that has been locked inside private markets for years. His co-host Ranjan Roy pushed back directly. By the time a company of SpaceX's maturity goes public, the most dramatic valuation gains have already been captured in private rounds. Public buyers, Roy argued, are more likely buying near a ceiling than a floor. Bloomberg Technology's reporting on retail order demand exceeding $70 billion suggests Kantrowitz is right, that appetite is enormous. But The Economist framed the same data more cautiously, noting that for companies at this scale and maturity, the question for public investors isn't whether the business is real, it's whether the price already reflects everything good that could happen. Here's where outside sources add the sharpest friction. CNBC argued that falling AI prices, driven by OpenAI's own price war, could actively undermine the IPO valuations of Anthropic and OpenAI themselves. If AI capabilities are becoming commoditized, the premium attached to frontier AI companies starts to look fragile. The AI Daily Brief pushed the other direction, arguing that the competitive pricing signals confidence from OpenAI, not weakness. A land grab for market share before the window closes. Same evidence, opposite conclusions. The question for any investor is which dynamic is actually driving the cuts. Across every source, two things hold. First, SpaceX is a genuinely exceptional private company. The scale and operational track record make it a credible public offering in a way most tech IPOs are not. Second, the AI pricing environment is shifting structurally. OpenAI's price moves aren't a one-off promotion. Premium-only positioning in AI is under real pressure, and that changes the calculus for every company in the space. First, if you're tracking SpaceX, watch its secondary market price on platforms like Forge Global or EquityZen before any IPO announcement. The gap between private and public pricing will tell you more than any prospectus. Second, run a side-by-side comparison of OpenAI, Anthropic, and Google Gemini pricing tiers right now. The cost per capability gap is shifting fast, and the best deal for your use case may have changed in the last quarter. If this kind of breakdown is useful, subscribing means you won't miss the next one. Third, find and read Anthropic's original Fable document that drew criticism. Then decide for yourself whether the backlash was substantive or a pure PR misread. It's a useful exercise in separating technical reputation from market execution. Here's the forced choice. Do you think the SpaceX IPO is a genuine wealth opportunity for retail investors, or is it the exit ramp for insiders? Argue your position below. All source links are in the description.